One of the most common questions that come up after setting up a Dubai trust or a foundation is that can you open a bank account for it? More specifically, can you open an offshore bank account? In this video, we are going to walk through the full process of offshore banking for Dubai-based trust and foundations, what it involves, which jurisdiction makes sense, and how to get it right the first time. Before we start, my name is Shiraz Wahid and I'm the co-founder at Leopardus Wealth, where we have helped many of our clients and families with trust, foundation, and other asset protection strategies in Dubai. If you would like my help in doing the same, you can apply for a free and customized asset protection plan by clicking the link in the description below. Now, there is a perception that once your trust or foundation is registered in DIFC or ADGM, everything else should fall into place automatically. But banking doesn't work that way anymore. Post 2020, financial institutions across the world have tightened their onboarding, especially when it comes to structures like trust and foundations. And if you are dealing with cross-border structure, the requirement can be even more complex. That is why understanding how to open an offshore bank account for your Dubai trust or foundation is crucial. Without proper banking, your structure becomes a legal shell. Technically, it's valid, but practically, it's useless. In this video, I'll walk you through how offshore banking works for DIFC and ADGM structures, what to expect, how to position your trust or foundation to get accepted by bank. When we say offshore bank accounts, we are referring to an account that is opened outside the UAE, typically in jurisdictions like Switzerland, Singapore, Liechtenstein, Mauritius, or emerging financial centers like Georgia or Armenia. These banks are often used for holding investments, managing portfolio assets, or collecting international client revenue. But they are also selective, and rightly so. Most offshore bank accounts today will not open an account for a trust or foundation unless the structure is clearly documented, has a traceable source of fund, and the ultimate beneficiary owner or the UBO is fully disclosed and vetted. This is where DIFC and ADGM structure can give you a real advantage. These are not anonymous offshore entities operating in secrecy. They are regulated structures governed by the English common law principles with clearly defined charters, governance rules, and registry oversight. That makes them far more credible and bankable than many offshore trusts created in lightly regulated jurisdictions. Now, let's look at what this means in practice. To open an offshore account, your structure, whether trust or foundation, will typically need to provide a notarized and attested copy of the governing documents. This will prove that the structure exists legally and is authorized to operate. You will also need to provide a certificate of good standing or a registry extract from DIFC or ADGM, confirming that the entity is still active and compliant with its obligations. Next is that every serious offshore bank will ask for a full UBO declaration. That means the ultimate owner behind the trust or foundation. Even if not publicly listed, we need to provide the bank with personal identification documents such as the passport, proof of residential address, and a detailed CV or professional background. In many cases, the bank will also require an explanation on the source of wealth, how the money behind the structure was earned, and the source of funds, where the specific deposits will be coming from, lawyer or advisor. This letter serves as a credibility layer showing the bank that you are coming through a known and trusted intermediary. In some cases, especially when the structure holds commercial assets or plan to operate actively, the bank may ask for a business plan. This includes a summary of what the structure intends to do, where it will operate, and how the funds will be managed or invested. Other banks may require internal documents like board resolutions or trustee consent approving the account opening, or details of the guardian, council members, or the trustee. Especially if the structure used multi-party governance model. Each bank's checklist is slightly different, but the core idea remains the same. The bank needs to fully understand who you are, what your structure is, and where the money is coming from, and what you intend to do with the bank accounts. That brings us to an important point that not all trusts and foundations are treated equally. Two clients might both have a DIFC structure on paper, but one might get approved and the other rejected. Why? Because a bank will always evaluate the substance of the structure, not just the documents. If your trust or foundation has no activity, no assets, no advisors, and no real reason for existence, most banks will decline the account. On the other hand, if your structure has a clear purpose, for example, holding intellectual property, managing a real estate portfolio, or serving as a family wealth vehicle, and if the source of funds is legitimate and clearly documented, then the odds of approval rise significantly. So, how do you increase your chances of getting approved by a top tier offshore bank? The first factor is the jurisdictional alignment. This means opening account in a country where your trust or foundation has logical connection, whether it's an investment you manage there or a holding company registered in that jurisdiction, or even professional ties such as an advisor or audit firm. This helps the bank justify why your structure is choosing the country for banking. The second factor is the UBO's profile. Offshore banks, especially in reputable jurisdictions like Switzerland or Singapore, want to see that the beneficial owner is credible. That means no sanctions, no high risk passports, a clean tax record, and ideally a demonstrable history of managing wealth. In some cases, banks will also do a video call or in person meeting with the UBO to verify the identity and the intentions. The third factor is relationship. Many offshore banks, especially private banks, operate on an introduction only basis. If you try to open an account cold by emailing their general inbox, chances are that it will never be reviewed. The onboarding process works best when initiated by an advisor, trustee, or a law firm that bank already knows. These intermediaries act as a first layer of due diligence and can present your case in a format that matches the bank's expectations. Now, let's talk briefly about timelines and fee. The process from application to activation usually takes between 3 to 6 weeks. In that time, the bank will review documents, verify identities, and run compliance checks, and possibly schedule an onboarding call. Some banks charge a due diligence fee or an onboarding fee, typically between 500 to 3,000 US dollars. Others may waive this fee if your deposit meets a certain threshold. For high-end banks, particularly in Switzerland, you may be expected to place a minimum deposit between the range of 250,000 US dollars up to $1 million. However, more accessible options also exist in other jurisdictions apart from Switzerland. If your goal is long-term wealth protection, multi-currency investment access, and discretion at the highest level, then places like Switzerland, Luxembourg, and Singapore remains the gold standard for offshore banking. But with that standard comes more scrutiny. You will be asked to provide detailed wealth history, audited documents, and tax declarations, and in some cases, supporting letters from your advisors or investment managers. And in many cases, the bank may continue monitoring the structure even after onboarding, requesting annual updates or asset statements. One last thing I want to point out that cannot be overlooked is the reporting. If the UBO of the trust or foundation is tax resident of a country that participates in the Common Reporting Standard or CRS, the offshore bank may be required to report the account details to the tax authorities in that country. This is not necessarily a bad thing, but in fact, for many of our clients, transparent structures with predictable reporting are preferable. But it does mean you need to work with advisors who understand the full picture, not just how to open account, but how it fits into your broader tax strategy and estate planning. A DIFC or ADGM trust or foundation does not guarantee that you will be able to open an offshore bank account. But when the structure is designed properly with clean documentation, a clear purpose, and a credible advisor presenting your case to the offshore bank, your chances of success are significantly higher. In today's environment, substance matters more than ever. A well prepared trust or foundation with a reason for existence and a story to tell. It can unlock banking access in some of the most respected jurisdictions in the world. If you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.